The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, good morning out there in Radio Land. I know it's 11 a.m. there on the East Coast. Bright and early, 9 a.m. out here in the Mountain Time Zone, sort of the forgotten time zone. You always see on TV, they talk about Eastern Time, Central, Pacific. Well, that's because there's few people that live in this time zone. But nonetheless, here we are. I've got a chart up there for you of the IWM, kind of the traditional way I open the program, this being the Small Cap Roundup and all. Looking at a gain of a little bit shy of 0.5% today on the IWM. So looking good, kind of trading in line there with the action that we've seen today on some of the major indexes. Now let me put up a chart here of something that I was looking at this morning. Recent IPO over here, Millennial Media. Let me say before I go into that, make sure if you have not yet that you download the IPO report that we put up on the homepage of TFNN.com. A look at 7 recent IPOs that are performing well. You know, there are others in addition to these 7, but these were some of the ones really that were rising to the top of my IPO scan. I ran a screen for companies that have gone public within, actually I screened for 2011 and 2012 IPOs. Okay, so you can tell, very recent companies. Companies that are newly public are often some of the market's biggest gainers. Don't let debacles like Facebook or Zynga or Groupon, don't let that skew your perspective, because there are frequently companies that just don't get that kind of media attention. They're not considered as glamorous. That those can often be, some of these non-glamorous names can be some of the market's best gainers. Now, the one I put up in front of you is Millennial Media, and that actually kind of was one of those glamour plays. Let me show this to you on a weekly chart as well. I had a retailer up there. We're going to talk a little bit about retail in the show today. So Millennial Media went public not too long ago. I remember talking about it on the show. It was in March. Wow, it seems like a long time ago, but it was in March, and there was a whole lot of the hoopla that day as the company went public, because what this does is they create apps. Okay, that was the magic word that drew in just a whole lot of fascination. Apps for advertisers to create campaigns across different technology platforms. Now, they've done something interesting. First of all, looking at, let me go back to the daily chart over here so you can see how Millennial Media is acting today. It's up about 21% following its earnings report. And this is a small company, market cap of about $944 million. Let's see, the liquidity, just a little bit shy of 300,000 shares a day on average. This would not have made it onto my screens just because of the abysmal technical performance thus far. I do talk about buying on the dips, but if you saw my webinar last night, I don't mean buy on the free fall. So I want to see some kind of support, some kind of technical moving average support. We did not see that on Millennial Media, although we do have today this nice 21, almost 22% jump thus far following the company's earnings report. Actually, it's up. I just refreshed my screen over here. It's up almost 23% as of now. So let's watch this one. This one could be one to keep an eye on. Another promising aspect of Millennial Media as a recent IPO. It does have very good revenue growth. Okay, we've seen, let's see, 76% revenue growth in the most recent quarter, 53% prior to that, 84% prior to that, then some triple-digit growth prior to that. Decelerating a little bit, but that's nothing to become panicked about, because you really can't argue with a 76% growth in revenue to $39.4 million. And the company is expected to turn a profit in fiscal 2013. So, this could be potentially one of these turnaround plays, a new company that's putting a lot of its revenue, putting it back into the company in terms of new, just putting its money back into company growth rather than reporting some earnings. Not uncommon to see that at all in some of these tech-driven companies. You see that a lot in biotechs and infotechs too. I saw the CEO interviewed a little while ago on CNBC. Now, he was talking about something interesting they did, which was they worked with Auntie Anne's Pretzel Company, and I'm sure many of you know that chain. And that's an interesting company all by itself. I saw a documentary about the founders. They actually came out of an Amish background. The founders of Auntie Anne's, they left the Amish community, and they're just terrific entrepreneurs, the couple who started that. Very, very interesting people. So they don't own the company anymore. They sold it. It's under different ownership these days. They've cashed out. They're enjoying life. And what Millennial Media did in partnering with Auntie Anne's Pretzels, they had an app that delivered coupons to your mobile devices, so your phone or your iPad. When you went to the Auntie Anne's store, then you could buy a pretzel, get a free Coke with that. Then they partnered with another company who provided the point-of-sale technology, who could track how many people had actually responded to the ad and redeemed the coupon. So that's a little different, because a lot of times, you issue these coupons, you have this advertising out there, and you're just not sure what's working. What's the old saying? You know that half the advertising doesn't work, you just don't know which half. So there are obviously now technologies that can help companies track the success rates of these campaigns. So that's pretty interesting. So that's something Millennial Media is doing. I'm not interested particularly in chasing this stock at this point. It needs a lot more time to prove itself. It's got a whole lot of overhead resistance to overcome here. Nonetheless, I do think that's an interesting move. It's an interesting story. This is a recent IPO. Small cap could be a company just to kind of keep an eye on in the background, not necessarily on the active screens, the way I trade, which is to be looking at something not with an hourly perspective, but really something. I'm looking at trades that could have days at the minimum. I don't even like trading in and out of things within days. I prefer them to have at least a weekly, if not monthly, time frame for holding. Although admittedly that's been a little more difficult lately in the past year and a half or so, even going back 2 years, just with the market action that we've seen. It's been a little difficult to hold some of these. I talk a lot about the fact that if you have bought something at a lower price and you have a very good cushion in the stock, and you do have conviction, and your risk tolerance is such that you're prepared to sit through some kind of moderate correction. I'm not talking about some kind of free fall. I'm talking about some kind of consolidation where you see support around the 50-day or the 10-week moving average. That's a situation where, again, if you already have good paper gains in the stock, you're seeing moving average support, you're seeing higher lows after a big uptrend, that could be a situation you'd want to sit through. Otherwise, there's a lot of these stocks that you really would prefer to just take your profits and move on. Nothing wrong with sitting in cash if the market is going through another one of those crazy downtrends that seem to reoccur with frequency, depending on what some politician in Europe has said recently. A lot of the analysts out there are saying, well, the market seems to be accepting the fact that Europe will deal with its problems down the road, and the markets are pricing that in. Okay, I'll buy that for today, but you just don't know what Mario Draghi or what somebody over there is going to be saying next week or tomorrow morning. So it is what it is till it changes, right? That's kind of what we're looking at in terms of these trends these days. So we are still in the middle of earnings season, obviously. Just talked about Millennial Media, kind of an interesting stock that I was looking at this morning. Here's a daily chart for Kohl's, and I'm going to take a look at some retailers today. That's a lot of small cap retailers out there. It's always interesting to me. You get a lot of these brick and mortar companies that have a pretty good presence that everybody knows about. Nonetheless, they are small cap stocks. Now, Kohl's, not one of those. Kohl's has a market cap of $12 billion, so it's kind of, by most definitions, you would consider that large cap, but nobody really considers a $12 billion stock a large cap. It's kind of in that no man's land between mid cap and large cap. So, taking a look here at the daily, now this company reported earnings this morning, and there was some disappointment in the report. It's down about 1.15% right now to 51.46. Kohl's is just sort of, that's an enigma to me, because it's not something like a Walmart where you run in there and get everything you need for really cheap. It's not even something like a Target where you run in and get everything you need for maybe a little more than Walmart, but it's stylish. It's kind of fun. It's got a personality to it. It's not a dollar store. It's not a Macy's. It's not a Nordstrom. It's not a Dillard's. What is it? I can't figure out what Kohl's is. And I don't think I'm alone in that. There's one kind of right up the street from me, and it's not in a shopping center. It's all just set apart, all by itself, like those old school department stores used to be. You hardly ever see that anymore. And it's so that in effect makes it a destination. And for the life of me, I don't make it a destination when I've got all these other places that I can go, and they're going to be meeting my needs much better if I'm slumming it and looking for shopping on the downside, such as a Walmart, or if I'm looking for something a little more upscale. Either way, Kohl's just is not the ticket. So I don't quite get what is going on with this company. Nonetheless, let's go over here onto a weekly chart and just take a look at what we've got over here. So you did see a nice uptrend in recent weeks, and we had a rally today after the news, and then as investors and traders digested the report, it pulled back. So we're going to take a look at some small cap retailers today in honor of Kohl's report. Give us a call, 877-927-6648. We can put some charts up there, take a look at stocks that you want to talk about, and we will be right back after these messages.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, welcome back here. Taking a look at some of these retail stocks today. As I mentioned before the break, there are a lot of small cap retail names. And a lot of those over the months have shown up on our Low Price Leaders newsletter. Before I go into some of these stocks, let me also encourage you to take the opportunity to get a free trial of Low Price Leaders. A lot of names on there that maybe you never heard of or you didn't realize that were small caps, because they might be sort of prominent stocks out there, companies you've heard of that you walk past in the mall or that you see advertising. But you don't realize that the stocks could be pretty good. Small cap opportunities. We look at stocks with market caps below $2 billion. Another category we break out, and hence the name of the newsletter, is Low Price Leaders. Stocks that are trading between $5 and $12 a share. No penny stocks. Don't worry about that. I'm not interested in trading the penny stocks, and I really don't suggest that most other people do that too. So we're looking at stocks between $5 and $12. I like to see some liquidity in these. Every once in a while I'll show you something that's very thinly traded that is an extraordinary performer and has some good earnings growth and revenue growth to back it up. But most of the time we'll be looking at names that have liquidity, that are moving about 300,000 shares a day or more on average. just a little, you mitigate your risk a little bit by doing that, just because if you have something that's too thinly traded, and say you have one, for example, small cap mutual fund that for whatever reason, it's hit their price target, they don't like the sector anymore, just some random reason that they've decided to get out of that, they could dump their shares and you could get hit hard. So that's why I just like to see a little more liquidity. You protect yourself a little bit more in that case. So let's take a look at some of these small caps that we have here. Let me put up a chart for something called Ascena. And this is one you probably, I had been watching this previously. I've got that up there for you on a weekly chart, and you're seeing some not so terrific price action on here. You've got your 10-week average moving lower, your 40-week average moving higher. Not what you want to see. Let's put this over here on a daily chart, and you can kind of see the same thing. You've got the 50-day moving average kind of moving downward toward the 200-day. You've got the 5-day below the 50-day. It's a mess. I don't like it, even though you're seeing a little nascent rally attempt here in the stock. Let me just see. I'm going to take a look and give you some numbers here for these moving averages. So you've got your 5-day line at 1824. You've got your 50-day at 1862. So that's what you want to see. Just not particularly liking the fact that it's below that 50-day right now. So this company is one. It's got some pretty prominent brand names. It's got they just acquired the Charming shops. So that's one there that this company owns, and this is also the parent company of Dress Barn, Justice, Maurice's. So a few names that you've probably seen as you've been walking around the malls, the stores you might just walk past. Unless you're a lady, one of our female listeners out there doing some shopping there. I've stopped into some of the Dress Barns on occasion. They have some things. That's not such a bad store. And the Charming shops are in the plus size category, so I think that's done particularly well. So some interesting, well-known brand names out there. Now this is a case, and I know a lot of the folks who are listening today tend to be more traders than long-time. You listen to these shows for information about trading rather than longer-term buy-and-hold style investing driven by fundamentals. But I'll just toss this out there because I know a lot of people do ask about making decisions based on fundamentals. I really don't do that. This one has earnings estimates. Let's see, for earnings growth of 18% in 2012, 15% in 2013, so that's not bad. And that does indicate that there could be potential for this stock to turn higher yet again. But at the moment, I'm not going to make an attempt to enter a stock like this that's trending lower. It is getting good support around those moving averages, so that bodes well. It really is not the case the bottom has fallen out here. So it could be a watch list candidate longer term, but not one that I would be jumping into at this particular juncture. Okay, give a call, 877-927-6648. Be right back with the next segment of the Small Cap Roundup.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, welcome back. Taking a look here, well, we have our European close, just taking a look at some mixed results. Got Germany finishing lower, France finishing higher. And sometimes we do see some moves on the U.S. indices based on what we see over there. Just kind of noticing we've got the Dow a little lower right now, so give it a few minutes to kind of shake out. And it's also not unusual to, as I mentioned the other day, see some money heading over this way after the European markets close, as some of these traders who kind of trade the globe get finished over there and they just move on over here. So, and that's one of the reasons why I often don't really like to trade in the earlier part of the session. I like to wait a little bit further into the day because you see a lot of these names that gap up, and if you try to chase the gap, even if it's a small gap or a small move up, a lot of times you will see a pullback later on in the session. I just kind of like to wait on some of those. So I've got a chart up here, daily chart for a stock. I think we looked at this earlier in the week. I've been behind this microphone a lot this week. I was guest hosting for Tom a couple times earlier this week, which was fantastic. Always welcome that opportunity. We did our webinar last night, and if you were registered for that and you missed it, you definitely want to make sure you go back and check that out. Talked for about an hour and a half, just going through a lot of charts, took some questions at the end. It was a great time, just really looking at some very, very basic moving average technical indicators. So I talked about this stock, the Fresh Market. Now this one has a market cap of about $2.8 billion. By a lot of the definitions, including the one that I use in the newsletter, that would be a mid cap. But if you look at the Russell 2000, the S&P 600, well, they would consider them to be small caps by their definitions, because they're looking at something with a market cap of under $3 billion at the time of purchase. And that's what a lot of the small cap fund managers will be using as well. And, you know, if you talk to these guys, and we'll bring some more of them on the show, they will tell you that they won't necessarily sell a stock just because you're seeing it surpass this $3 billion level in terms of market cap. That won't necessarily be a sell signal. They're looking at other items, you know, valuation models. We were kind of joking a little bit about some valuation models in the Tiger Den on the break. You know, some of them are quite good. I don't disagree with a comment that was made in there, but others you just have to wonder, because how often, I mean, I see this a lot. I see where some analyst will have a valuation model that shows a stock should reach X price, but the thing just kind of either falls and defies that model completely, or it just kind of just trends along, really going nowhere for quite some time. Now, I think for fund managers, it's a different situation. They can kind of hold through some of these things. Retail investors, not only do we not have to, but it's frequently, as I said earlier, unless you have a cushion in the stock, it's frequently not a great idea to be holding through these. So, I've got the Fresh Market up there for you. We are seeing that on a daily chart, and you notice it did have a nice rally here. There's a whole lot of longer term renewed interest, growing interest in this idea of organic and natural foods and eating healthier. And you know, we're only going to see that growing. It's interesting to me. I was, as many of you know, I do some work for Jim Cramer over at realmoney.com, and I did see, I was watching Jim on CNBC yesterday. I know that he's gone vegetarian, and I know he talks a lot about his kids being vegan, and he was talking about visiting one of his kids on a college campus and how many of the students there today are vegetarian and vegan. I believe that's really going to be a very growing market. I mean, I'm seeing adults well into their 40s, 50s, 60s who are deciding to adopt that diet, and quite successfully. And even if you don't go vegan, just the whole natural and organic foods movement is growing. I mean, I know I'm sure part of that. I'm sure part of that. I prefer to get healthier ingredients in my foods, and I know a lot of people are kind of moving away from a lot of the processed stuff and into some of this. So you're seeing companies like the Fresh Market growing. These are very nice stores down in the southeast. This is a recent IPO. So one of these names that I really like because it is so new and does have some of this potential to continue growing in the next few years, in the next decade or so. Let's see, went public back in November 2010 at $22 a share. It's trading at about $59 right now. You know, you would have had to have had a pretty strong stomach to try and buy and hold this one. I guess no pun intended there with the grocer, strong stomach. Let's see here. So kind of a lot of bobbing and weaving, and of course in that time frame between the time it went public and now, we've had some volatility in the market. So let's just take a look here. Let's do a quick analysis in terms of the moving averages on the Fresh Market. As you see clearly there, it pulled back from an all-time high not too long ago, just a few days ago, and it is right now about 0.7% below that 5-day moving average. You know, this could be in a very good area of support and could be something that could be offering some buy potential in the not too distant future, just be aware. I mean, you can look at this chart and you can see, tough one to hold. It's got a beta of about 1.1. So that's kind of made it a little difficult, some difficult trade. Moves about 1 million shares a day, so some good liquidity, good estimates, and this is kind of what I'm talking about just the good forecast. And you don't buy a stock based on the forecast. It just kind of shows you the degree of institutional confidence. Expected to grow earnings 27% in 2013, 24% in 2014. So that's an interesting one there from the retail sector. Kind of liking that one. I'm going to kind of just cherry pick and show you a couple that I like today, just as a consumer. I'm going to go all Jim Cramer on this one today, and show you some companies that I enjoy shopping at. Now here's one, and again, I was kind of speaking earlier to any of our ladies who are listening today. DSW. Now come on. Who doesn't love DSW? I have even seen men shopping in there. They have quite a men's shoes section with a lot of good values in there. And the men that I've seen shopping in there for shoes for themselves, of course, seem to have been enjoying the experience as well. Because, for men's and women's shoes at DSW, you get just a great selection, designer brands at some good discounts. So let's just take a look at the chart here. So this is another one. I've got this for you there on a daily chart. This is another one of those. It's kind of in mid-cap land by my definition, market cap of about $2.6 billion. And again, by some of the more institutional definitions, this is considered a small cap. So right now, it's about 0.2% below the 5-day line. Not bad little consolidation right there. You could be watching that. That could be offering an opportunity in the not so distant future. It hit resistance right over here just at $62. In fact, $61.99 hit some resistance over there. So a pretty good chart. Let's take a look at this one over here on a weekly. Okay. And just see how this one is performing. Pretty good action. And again, you can tell this is another one of these names that's kind of been a little bit hard to hold. Let's see here. We are looking at, now there's something potentially bullish that happened over here. Right, let me go back to a daily chart and show you. So you see how this low right over here, where the stock gapped down, it undercut the lows of the previous consolidation. I like that action. What that means is you had a lot of the institutional holders got shaken out back here, and even when this happens, this is what's so kind of funny about some of these gaps down. Got support nicely there at that 200-day moving average. You can see that quite clearly. That was a very good sign. It's rallied back. It's almost completely rallied back since then. So there's some very good potential in this particular stock. Let's see here. Now, the earnings estimates, analysts are seeing growth. So we finished fiscal 2012 with $3 a share. Analysts see $3.28 a share in fiscal 2013. $3.74 in fiscal 2014. So some moderate growth. I had an interesting conversation a couple weeks ago with a apparel and footwear analyst at BB&T, and he made a good point. He said that while there does appear to be, and again, the analysts, I know we're not going to take what they say as gospel truth, but they study these industries. They do have a pretty good insight, so some of their opinions and research are worth listening to. He was saying that there could be a little bit of slowdown or less robust growth in the footwear segment of retail because that has been strong in the past few years. and people may be kind of looking at their closet saying, do I have enough shoes? Now, I don't know who's doing that, but maybe there's somebody out there who's saying that. Do I have enough shoes? I don't think I've ever said that, but maybe some people are. I don't know. So in any case, that's what we're seeing there in DSW. I like the chart in this one. Got a few more minutes in this segment here. Want to just go and take a look at some of these other. There's just a whole lot of interesting names from retail. Here's one. Let's go to something, as the name of the old Monty Python movie was, now for something completely different. We have Beacon Roofing. Now, Beacon Roofing is, as the name suggests, it's more of a building supply company. And this is, let's see, it went public back in 2004, so still in the new zone. I still consider that pretty new. Because, as I mentioned, sometimes you see stocks post their best gains not only within maybe the first decade or so of going public, but within the first 15 years or so of going public. So this one has a little bit of growth left in it, potentially, from that measure. So let's see here. Let's go over to a weekly chart of Beacon Roofing, BECN. Now, this company just made an acquisition. They're a Massachusetts company. They just made an acquisition of a California-based roofing supplier. You know, I'm not thrilled about this chart right now, but I'm not necessarily totally discouraged by this one either. You're seeing there, you are seeing some good support at that 40-week moving average. So when the stock did dip down, it did go on to get some support there. Now, you've got another case here, and this is kind of subtle. It's a little bit difficult to see on the chart. Let me go over to a daily. Might be a little bit easier. Where you do see where, when it pulled back over here, undercut the lows of the prior consolidation. It is much easier to see on a daily over here. So did undercut these lows over here. That can often set the stage for fresh gains. This one's been kind of bobbling around a little bit. And it's kind of, let me see here. Let's just do a little short-term moving average analysis right here. What we got, it's about 2.5% above that 5-day line. You've got the 15-day line, however, above the 5-day. Okay, you've got your 15-day moving average sitting at 25.57. You've got your 5-day line at $25.46. You know, that may cross higher. Watch for that. That could happen today, in fact. And that could provide an opportunity to enter the stock. You know, this is not one. Just taking a look at the prior history, it has a little bit of a mixed track record in terms of when it rallies to new highs. I talked about this on the webinar last night. You have some stocks that when they rally to new highs out of a consolidation, that can provide more momentum. Okay? Other ones, when it rallies to a new high out of a consolidation, it very quickly rolls over, and there goes your momentum. So, you know, this has a mixed history, but if you are able to jump in there and ride some of those short-term trends higher, you can often get a few good days out of the stock. So that could be worth looking at on Beacon Roofing. Be right back with the final segment of today's Small Cap Roundup.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
All right. Welcome back. This is the Small Cap Roundup. And just a reminder, check out the homepage of tfnn.com. You want to take a free trial of our Low Price Leaders newsletter. We do have a couple of winning trades on right now. You know, one of the things that risk management is one of the key components of my trading. And just to kind of illustrate that to you, I've got a chart up there of Lumber Liquidators. LL is the ticker. This is another one of these retail names, small cap retail. And of course, you know, this is one that you might see a lot. They advertise a lot on cable TV. They're, of course, the discount flooring stores. And it's kind of one of those that is in some ways just these companies that you see with a large brick and mortar presence, with a lot of television advertising. And then, to me anyway, it's often surprising to see how small these companies really are. About 1.2 billion market cap, trades about 708,000 shares a day. And let's see here. So this one, you see here on the weekly chart, had a big jump up on its earnings, kind of pulling back a little bit. Let's go over, take a look at this on a daily chart. And by the way, I believe that this could be, this is a good buy candidate at the moment. It's one that I have been tracking for quite some time. I've been talking about this one, writing about this one. Excellent support right there at that 5-day moving average. It's getting a nice little uptick today below that previous high of 44.73. Nice support here. You know, it's very, very normal to see a stock gap up on the earnings and then just kind of pull back a little bit very gradually. You do see some traders and investors who bought in at a lower price point who are taking some profits right now. So that's very, very normal to see that. So could offer an opportunity here. I don't like to chase these gap ups because a couple things. You can, first of all, you can get shaken out ridiculously fast if the thing retraces its gains for any reason, and you see that happening. The other thing that can happen if you try to gamble one way or the other ahead of the earnings is you can see a stock get smacked down pretty hard, and if anybody wants a visual reminder of that, there's Priceline. And I know this is fresh on a lot of people's memories here, because it just happened the other day, and a stock that is, as a large cap, a lot of folks were in. And this is something here you don't really want to necessarily be in a full position on something ahead of the earnings. If you have a small position, then you might be able to kind of sit through an earnings report and it won't damage your overall portfolio value too much. And nonetheless, with these smaller stocks, we're talking about discretionary positions in these. So that's a look at Lumber Liquidators. I'm liking where it is right now in terms of the technicals. Want to remind everybody, we're winding down the show here. Stay tuned. Larry Pesavento is coming up next. You don't want to miss his show in Tucson, Arizona. I'm out here in Santa Fe. He's in Tucson. You've got the Wild West Hour here, or 2 hours with my show and then Larry's. He's hosting the Futures Hour here on TFNN. Don't forget, check out the homepage, tfnn.com. You've got your Low Price Leaders newsletter. Take a free trial. Get in at the introductory rate. And you also want to make sure you download the free IPO report that we put up there the other day. So it has been a pleasure spending this hour with you today. I will be doing my little guest spot on Tom's show later this afternoon, so you might hear me then if you're listening. And otherwise, I will talk to you on Tuesday with the next edition of the Small Cap Roundup.